Apple misses its first quarter since 2004. I'm Jill Malandrina with the Streets Options Profits.
And I'm Scott Redler, Chief Strategic Officer with T3Live.com.
So they had Q4 come in, 52% beat on profits, but that clearly missed consensus estimates. Same thing with revenue, up 39%, but again, it did not meet what the street was expecting.
Well, Wall Street always thinks Apple's going to blow earnings away, and I always think that Apple's going to blow earnings away as well. But year over year, earnings are up 50%, revenue's up 40%. They've traded a PE less than 15, so it's far from overvalued. But we trade in real time, and we have to watch the action real time. So first thing you have to do is know what's your time frame. You have to know whether you are a long-term investor in Apple. If that's the case, just sit tight. Don't add here, wait for more data. I think you're going to be fine. The historic highs aren't in forever moving forward. I think that this was just one quarter. A lot of people are going to wait for the iPhone 5. They're going to have an unbelievable holiday season. I just think this is a good opportunity.
Right. So this is a name that we've traded several times on, options profits plays, several times with T3 Live and on the street. We've done very, very well with it, trading it within the ranges. So what are we looking at now? Can we get into a trade? Do we short it from here?
Well, this is what I'm going to do, okay? First things first, I took an option strategy yesterday that's going to be worthless. I took a bullish strategy, and that was then, this is now. Today I come in, I don't own Apple. What I'm going to look to do is I'm going to look at levels, and I'm going to do my set of rules. What I do is I like to see Apple just say put in a low within the first 15 to 30 minutes. If I'm looking long, I'm going to trade versus that low so I know what my risk is. First, and then what you do is you combine that with levels. So look, take a look at the chart here on Apple. Okay, Apple is now down, I think around 396. If you look here, this level is around 400, which is already below. I think the after hours low is 388. You have a gap here that starts at 391, and then you have the 50-day moving average around 388. So I think 388 to 391 is going to be big support. I'd love to see them push it down here quickly, bounce off of it. I will buy versus that area. But when you do that for the short term, you give it to that area. You don't play the cost average game. You don't start buying at 395, 392, 388, because if it doesn't bounce today, okay, which it might not, then you could get really in pain. So what you do is you trade a level versus a level and know your risk. So if all of a sudden it goes down to 390 and then it goes to 392, you buy it there and it starts working higher and you use your intraday charts. Then you go to a 3-minute chart or you go to a 2-minute chart, look for continuation patterns, and then what you want to see is how much of this downside gap does it fill. We were at 422 yesterday, so investors could buy it on sale, right? Do they want it on sale? That's why gaps are important. Do people think that they could pay 400 today or 395 today better than the 422 yesterday? And if they don't come in and think it's cheap here and they don't fill any part of this gap, that gap will control the stock. And that's the gap that professional traders will look at to see if it gets filled at some point in the next 5 sessions, which would make it a non-event, and then it would be status quo as usual for Apple. It just might not be as powerful until we get more data and more maybe some details of how the iPhone's selling or how holiday season is. But if it doesn't fill any of that gap, okay, chances are, if it doesn't bounce, you're going to see lower prices, and then we're going to break that 388, and then you could see, if you take a look at the chart, a move back down to this area, which is about 378, and then the 200-day now is around 360. So this level, if this holds, I think it's extremely bullish. Okay, if this doesn't hold, then I think over time, if you want to invest in Apple, get closer to the 200-day and we'll monitor it as it goes.
Well, it's also interesting to note that the company typically doesn't give guidance, but they actually guided that they're going to be up for Q1. So there's some positive forces fundamentally working for it too.
Well, usually they give guidance, they just dampen it. They just lower the guidance.
Well, they were pretty adamant in saying that they are guiding up for Q1s, and I think that's something interesting to note for longer-term holders that are looking at it from a fundamental perspective as well.
Right, so they did the opposite, where usually they beat and guide down. This time they missed a little bit and they guided up. So today could be interesting because who knows, maybe they even fill the whole gap. I've seen crazier things. That's why trade versus levels, know your time frame, and don't panic.
Okay, great. Thank you, Scott.